future on Wall Street briefly rebounded from their lows, but extreme volatility has returned once again. European markets are declining again as Trump's tariffs take effect, reversing yesterday's short-lived recovery that ended a 4-day losing streak. Earlier, Asia-Pacific stocks initiated a global equity rebound, with US markets initially following suit before pulling back. Big Tech's Magnificent Seven sheds $2 trillion as Trump intensified tariff measures. Oil prices have plunged to a 4-year low as international relations experts warn that the escalating trade war is threatening global energy demand. Chipmaking giants hit by tariffs facing threefold trade war impact. Joining me right now is Ayanaba Banerjee. Ayanaba, shed more light into how the markets are reacting, in Europe particularly.
Thank you, Megha. Now let's take a look at the markets of Europe. IBEX 35, which is the benchmark stock market index of Spain, is currently at 11,686.40 points, which is lesser than 379.20 points of yesterday. It has also gone down 3.16% since yesterday. Moving on to FTSE 100 index, which is the United Kingdom's best known stock market index. It currently stands at 7,716 points and has gone down 3.58% since yesterday. Moving on to DAX performance index, which is the stock market index of Germany. It currently stands at 19,781.5 points and has gone down 3.98% since yesterday, which basically means it has also gone down 807.39 points since yesterday. Moving on to CAC 40, which is a benchmark French stock market index. It currently stands at 6,925.98 points and has gone down 3.90% since yesterday. That is all we have from Europe. Over to you, Megha, in the studio.
All right, let's take a look at some other developments. In fact, Ajay Dua, who's the former Commerce Secretary, joining me on the telecast. Ajay Dua, big developments, particularly right now. Just a few moments ago, China comes up with retaliatory tariffs. It says additionally there are going to be 84% tariffs that are going to be imposed on America, and these are going to come to effect tomorrow onwards, April 10th. How is this going to shake the markets?
Thank you very much, Megha. I think what the United States did yesterday, when it imposed another 50% duty or 52%, that we doubled it up from the earlier 52% total which had been imposed on China. China has today just made up the differential. Earlier it had levied a 20% duty. By putting another additional 84%, it has said we will do tit for tat. You're levying 104% upon us, so will we. You have said that these will come into effect at 12 o'clock on the 9th. That's tonight. So, because China being a little ahead, they said, so will we. Ours come effective about the same time on the 10th, since they are in the Eastern Hemisphere. So we are seeing an outright trade war which has begun. I don't think we should mince our words that there are fears of trade war, or now we're going to be seeing outright disruption of global trade economies through largest trading blocks at each other's throat. How it will shape the world economy, it cannot be, no one can, even the most optimistic person cannot say that it will be good for the world. I think we are heading into all kinds of consequential effects upon countries in the West as well as in the East, developed as well as not so developed, and it will also affect, and that could have manifold more serious attempts at capital flows between the countries which we have been seeing. So trade leading to capital flows effect, investments, stock market is just one manifestation, which means an all-round disruption in economic growth and development.
Right, absolutely. Also, statements coming in, there are up to 70 countries that have already called up Donald Trump, the US administration, wanting to hold meetings with the US administration to strike some sort of a trade deal so that the tariffs can be reduced. These include not just countries in Asia, including Vietnam and talking about Malaysia, talking about Thailand, but it is also countries from Europe like Spain and Italy and South America as well.
Which is so true. But the question is, President Trump has dismissed all these by using some four-letter word yesterday, saying that they are all running around him and they want to do this and they want to suck up to him, etc., which is not done, even if because you are dealing with independent sovereign nations. They are affected. Yes, you are the world's biggest economy, the world's biggest trader, most powerful country, but when 70 countries or 50 countries, whatever the number is, appeal to you saying, please give us more time, we are willing to negotiate. All that you do is see your closest ally, that's the Prime Minister of Israel, Mr. Benjamin Netanyahu, but even him, he was cut short in the press conference when a question was asked of President Trump in Netanyahu's presence. He says, no, you'd been kind of short of using, again, the slang language which he does.
Okay.
The president was constrained to say, no, I'm not going to reduce it. So this is what he's going to say. He's now telling the 50 or the 70 nations who have appealed to him to go easy, saying, no, I told you I can bring you down to your knees, and I'm doing that. We will see what to do. So China on one side, and China, yes, affected more, but he's also taking on 70 other countries of the world. So how can things remain normal, even if there are good intentions to build, make America great, bring manufacturing back, all that a national leader can be expected to do, but certainly not at the cost of disrupting the whole world economy, which is going to affect the very process of recovery which President Trump aims for the United States.
Okay. All right. Thank you for joining me on the telecast and sharing your views. Meanwhile, China